in consumption patterns post-GST. It's my privilege to introduce our distinguished resource person, Professor Sacchidananda Mukherjee, currently serving as a professor at the National Institute of Public Finance and Policy, New Delhi. His association with NIPFP spans more than 17 years. Prior to joining NIPFP, he held research and policy positions with the Worldwide Fund for Nature and the International Water Management Institute. He has earned his PhD in economics from Madras School of Economics, University of Madras. Professor Mukherjee has led and contributed to numerous high-impact research projects sponsored by organizations like World Bank, Foreign Commonwealth and Development Office, UK, ICSSR, CBDT, TRI, and Ministry of Finance. As an accomplished researcher, he has authored and edited several books, including widely recognized Evolution of Goods and Services Tax in India, published by Cambridge University Press, and has published extensively in prestigious journals. His academic excellence and research contributions have been recognized through several prestigious fellowships and awards. In 2018, he was selected as a fellow of the International Visitor Leadership Program on Natural Resources Economics, Water Pricing, sponsored by US Department of State. In 2015, he served as a visiting international fellow at the Tax and Transfer Policy Institute, Crawford School of Public Policy, Australian National University, Canberra. He was also honored with the Young Scientist Award by the International Water Management Institute in 2006. Beyond his academic accomplishments, he currently serves as advisor to the Department of Taxation and Excise, Government of Tripura. So today, we are very much fortunate to have you with us, sir, and we look forward to an enlightening and enriching session. Thank you, sir, for accepting our invitation. And the session will be chaired by Dr. Minimol MC, Associate Professor, Department of Commerce and International Business, Central University of Kerala. With over 20 years of teaching experience and 18 years of research experience, Dr. Minimol MC has established herself as a distinguished academic in commerce and management. As an accomplished researcher, she has publications in numerous Corpus and Web of Science index journals. She has also undertaken projects sponsored by ICSSR in the year 2014 and 2023. On behalf of everyone present, I extend a warm welcome to our resource person, Professor Sacchidananda Mukherjee, and the chair, Dr. Minimol MC. Here I request our respected chair to kindly escort the speaker into the session. Over to you, ma'am.
A warm good morning to one and all present here. Professor Sacchidananda Mukherjee, the resource person, my faculty colleagues, and my dear research scholars and students. Within a short span of time, during the inaugural session, we all came to know that the kind of resource our resource person is having with him. So he is coming all the way from Delhi to here to exchange his experience, to share his experience. He is having very good experience in the field of GST, that too in public finance. What are the kind of issues and problems? So I think the conference organizer has arranged a very eminent personality for the first session of the day. Thank you for that. And I consider it as my privilege to chair the session. I am not taking much time. Sir will be taking us through the hidden kind of difficulties involved in the entire execution of GST, I hope. Thank you very much, sir, for accepting our invitation, and over to you.
Thank you very much, and good morning to all of you. I'll be preferring to stand here and explain my presentation. So, yeah. Up and down. This. Okay. Okay. So, thank you very much, Dr. Minimol, and also Dr. Srobana, Professor Binay, and others. So, the topic given to me is a technical session is a GST 2.0, digital transformation, compliance management. No, sorry, the structural shift in consumption pattern post GST resource post GST. So I will shift a little bit from that topic, and I will discuss this topic, but my point is that the structural shift in consumption patterns, to understand that thing, you need to have the consumption survey, consumption expenditure survey, pre-GST and post-GST. So pre-GST survey was conducted in 2011-12. The last consumption expenditure survey was conducted in 2011-12 by NSSO. And the recent consumption expenditure survey was conducted in 22-23 and 23-24. So comparing 22-23 or 23-24 with the 2011-12 is difficult, because the 2011-12 and the GST is introduced in 2017. So that's why I am not going to that path, but what I'll do is that I'll take you to the larger aspect of GST and what are the issues and challenges of GST, and hope that those who are sitting in the back, they can come forward, or they can use that this thing, display that is shown in the TV and that thing. So if you have any problem, please stop me. And also I will request my dear students that if you have any problem of understanding any of this concept, please raise your hand and raise your question. I came all together from Delhi to interact with you. Not my colleagues here sitting in the front rows, but with you I came for that thing. So with that, I will introduce my coverage of my talk is that what is the revenue implications of the GST rate restructuring. I have already told that what is the major purpose of GST rate restructuring that have happened from 2025 September, and I will talk about what is the revenue implication of that thing. And actually that there is a revenue impact of this restructuring. I don't have to explain that thing. The front, every day they are facing the problem after 25 September. What is the revenue impact? They know much better than me. Second topic that I will be talking about, do lower tax rate translate into lower consumer prices? That Professor Saji has mentioned today morning that whether these benefits of reduction of consumer, basically GST rates, are translating to lower prices, and if have happened, and which commodities it is happening. That is my second point I will be addressing. The third point is very much relevant for this conference, is that compliance cost of GST, and specifically for MSME sectors. What is the compliance cost? Compliance cost of all of you know that for paying taxes, what is the additional cost you bear in terms of chartered accountants, lawyers, then you need to have internet connection, then you have computer, accountants and other things, right? All these are required to comply with the rules and regulation and filing returns and that thing. So I have an estimate and that thing, and this paper is coming very soon in Indian Economic Review. And the fourth thing that I will be talking about, the distributional aspect of GST. That means who pays and who bears the burden of GST across consumer groups. Because when the tax, as I mentioned, that 64% of tax is coming from consumption of goods and services, and out of that 50%, that means our tax GDP ratio, that the GST is contributing 6% of GDP in India. And this 6% of GDP is coming, and all of you are paying small amount of money in terms of goods and services tax. Who is bearing how much tax burden? That is a research question that I have addressed. And the last question is basically the assessment of revenue performance in GST. So with that, I have lots of things to explain. Please stop me if before 10 minutes or 15 minutes, so I can take some questions on that thing. So with that is my, this slides is very much informative, but the thing is that very small fonts. So if you see the GST rate structure, the current and the earlier rate structure, we have the 5%, 12%, 18%, 28%. So 12% rate is not there, but we have three pesar rates, the nil rates, 0.25% and 3%. 0.25% is the PCR stones, and 3% is the gold and gold jewelry. Then we have another 1, 2, 3, 4, 5 another pesal rates. 0.1% is basically the supplies to the merchant exporters. 1% is the TDS collected when the I was taking that government is giving something, tenders or some thing, they have to on front they have to collect the 1% TDS on giving the tenders and that thing. So that's the 1.5%. You have the affordable house, basically the construction of affordable housing, cutting, polishing, diamond. 6% is the basically the brick cleans, also composition taxpayers, also service. They pay the 6%, 7.5% you have the construction of residential apartments other than affordable residential apartments. So you can see that our tax structure is not only the three rates. And on top of that, earlier we had the GST compensation cess, now it is subsumed into GST. So the 28%, now we have 40%. Now 12% is not there. So now we have 3%, 5%, 18%, 40%. Apart from that, we have this, all the special rates are there. So this is all about the GST reforms that we are talking about, the GST rate restructuring, that thing. Now the question is that why this September this thing came and why we restructured the GST rate structure. The reason is that the first reason was that there was a huge criticism of the government that they have multiple rate structure. So they consolidated the rate structure. We are asking for two rates, one standard rate and one demerit rates. But now we have almost two rate structure, 5% and the 18%, but we have also the 40%. Apart from that, we have the special rates. All the special rates are still there. Now the second reason why the government was thinking of having the rate restructuring is that the subsumations of the GST compensation cess. Because there is a lobby that was saying that, or there is a talk in the policy circle that whether we should continue with the GST compensation cess or not, whether we should abolish the GST compensation cess. But if you see, the GST compensation cess is levied on all the goods and services which are seen goods, like take example of tobacco products, then we have luxury cars, then we have the aerated carbonated beverages and this thing. Why these are bad for health? And there are lots of externalities. If somebody is consuming alcohol, tobacco or alcohol, is also hampering public health concern of the government or the economy. So that's why we need to have this GST compensation cess, and it is subsumed into now the GST rate structure. And all of you know that if you have multiple rate structure, there's always problem of misclassification of commodities. And there will be, if I, as a supplier, as a taxpayer, I'll always try to classify my goods into lower tax brackets. So when you do that thing, if it is not according to the law, then it will be a classification disputes, because the tax administration, the concern is that always the goods will be classified into higher tax categories, higher tax rates. And their concern is that they want to put it into the lower tax brackets. If these two things are not according to the acts and rules, then there will be litigation or misclassification problems, you will raise the demand, they may not accept, they will go for litigation, then they will have a court cases, and then all kind of things. So that's why multiple rate structure is bad. Basically, it actually leads to revenue leakages and also tax evasion, and also lots of it's also problem for the tax administration, because tax administration may not be very conversant that what is the tax rate on commodity. What will be the tax rate on? There are lots of cases during the VAT regime, sales tax regime, and even in the GST regime, we have lots of cases how to classify this thing. One example is that utensils with the copper back. So utensils, the steel utensils with the copper in the back, the outings will be taxed differently and different from the steel utensils. You know. So steel utensils tax around 5%. If it is a copper, then it will be taxed in 18% kind of thing. There are lots of example I can give. So that's why we thought that at least there will be reduction of this classification dispute, and that's why the tax rates are reduced to. So please remember, the tax rates are reduced from 18% to exempted. There are lots of items where under 18% are now exempted. Apart from the insurance premium, the first example is insurance premium, life insurance and health insurance premium. It was under 18% tax rate. Now it is exempted. Similarly, the 12% tax rates are also taken to the 5% tax rate, and some of them are also exempted now. So that is the one thing I want to talk about. The next thing is that what is the revenue impact it will have of GST rate restructuring. Now, please remember that when the GST rates are reduced, the basic assumption is that the benefit of reduction of tax rate will translate into lower prices. The basic assumption of this understanding, of this thought, is that when taxes are reduced, the taxpayers, that is the manufacturers or distributors, will pass on this benefit to the consumers in terms of lower prices. When the prices are fall, there will be two effects. When you are going to the market of 100 rupees, when the prices fall, you can purchase the more items. Suppose you are purchasing this bottle of water of 10 rupees, if the prices is 8 rupees, then after purchasing say 10 bottles, you can have another say 20 rupees in your hand, right? Earlier it was 100 rupees, now it is 80 rupees. So 20 rupees you can have, so you can purchase 2 of these bottles more than 2, and also 2 rupees you can have additional in your pocket. That is one thing. Then there is an income effect. Income effect, that means you will have more disposable income in your hand or purchasing power, because you need 10 bottles of this water. So after purchasing 10 bottles, again 20 rupees is in your pocket, right? If prices are reduced, this 20 rupees you can purchase 2 packets of biscuit. This is called income effect. And the price effect is that when prices reduce, you may consume the same commodity or may consume some other commodities and that thing. In economics, this is called price effect and income effect. So all these two effects, the price depends on the commodity, how the price elasticity of demand. This is called the Ramsey rules. Ramsey rules is a concept of taxations that say that if you have the price elasticity of demand is low, that means you don't put higher taxes on that commodity. But in the price elasticity of demand is effect that if you reduce the prices, there will be more demand for that commodity or not. That okay? So there will be price effect, there will be income effect, and there are 2 other effects: the formalization of the economy and improvement in the tax compliance. Why the formalization of the economy? Any idea? My dear students, if tax reduces, why there will be a formalization of the economy? Any idea? Okay, let me explain. The first thing is that why I will take the GST registration. GST registration, I will take the GST registration only when my input tax credit side, input tax credit that I can claim is higher than output tax liability. Okay? Here I am doing interstate transactions, or that I am very much visible to the tax administration. If my threshold is, I am doing the businesses of my turnover is above 40 lakh rupees, then legally I am binding to take the tax registration, right? Why I will take the tax registration? Because if I don't have the tax registration, I can do the tax, any kind of business with the registered entities, because the problem will be that the registered entities will be against on doing business with me, because they have to pay the RCM, they have to pay the tax on from their pockets when they are purchasing from me. This is called reverse charge mechanism, and is a compliance burden for the registered entities to do business with the unregistered entities or composition dealers. So that is the one reason. And the thing is that my argument is that in those who are small and medium scale industries, they don't take the registration because their input tax side is not very high as compared to output tax liability. So if they don't take the registration, what they will do, that they can always sell the products in the unregistered market, like the cash based transaction. Take example, I am giving some example of doing that. Mostly this business is under unregistered in GST, like the plastic items, like the utensils, textiles and this thing, because mostly we purchase in cash. There are small household items like phenyls or some kind of mops or some kind of this kind of thing. Mostly people purchase directly from the market and they pay in cash, so they don't want to take the tax registration. So that is the one thing. And second, so now the thing is that when the tax rates reduces, so you will have, so input tax side, you will have higher input tax credit available and your output tax liability falls. If you have higher input tax liability and lower input tax liability in terms of output tax case, in that case you will take the tax registration. So that is the one major drivers for formalization of the economy. And the fourth way how the tax environment increases is that when the tax rates reduces output tax liability, in a situation, tax environment, you will do the tax evasion, and to do the tax evasion, you have to incur certain cost. The cost is the chartered accountant, you have to pay, lawyer you have to pay the side payments, bribes and all these things. To do that thing, then these costs are, there is basically is the constant cost to you're doing the business. So the constant cost of doing business is basically that thing, apart from the regular accounting that any business do, they do spend lots of money to chartered accountant, lawyer, and also do lots of side payments, basically bribes and that thing, to evade the taxes. So when the tax liability falls, your output tax liability falls, you say that, okay, now I am not taking, I will be honest guy, I will pay the tax whatever is coming to, because my tax liability from 18%, now I have to pay only 5%. So I will come voluntarily, I paid the taxes. So there will be lots of tax environment. There is also the thing is that when tax rates are reduced, people voluntarily will be paying the taxes, because the premium, after paying all the side payments and all this thing, there will be much lower in case of evading the taxes. These are concepts I can explain in much more theoretical economic side, but you may not understand that thing. There are lots of modeling and that. So these are the 4 channels. The first 2 channels in the price effect and the income effect increase the scale and composition of the consumption basket and improves your tax revenue, GST revenue. And please remember, these are the effects are not instantaneously you can feel. So today taxes are reduced, that tomorrow you will go to the market, the prices will be lower, and automatically your output demand will be high, tax revenue will boom. It's not. It will take some time. It will take at least 6 months to 1 year to see this effect. And these 2 effects will improvement in the tax environment, tax moral, is much more visible in the long run. So these are the effects, are positive effect on the GST revenue there, but there are 2 negative effects of the tax after the GST did restructuring. One is that inverted duty structure. In case of the new tax regime, there will be larger incidence of inverted duty structure. Inverted duty structure means when your output tax liability is lower than input tax liability. Thus I have already explained. Input tax that you pay is higher than your output tax liability. In that case, it will be inverted duty structure. And then you have to give the refunds. Earlier the system was that they have to adjust this excess tax that they have paid over the cycle of their tax payment. Now upfront they can claim the refund up to 90% or 80% they are eligible to get the refunds kind of thing. Now the reduction of the GST rates, if the tax rates are reduced, there is a lots of money was coming from 18% tax rate. Take example of the insurance premiums, life insurance and the medical insurance premium. For a state like Kerala, there will be lots of life insurance policies premium and medical insurance policy, and they are paying the 18% tax on. But that money from the September 2025 is 0. That means no revenue is coming. Apart from that, 12% tax rate, 18% tax rates are reduced to 5% or exempted. That means there are lots of impact on your revenue. So there are 2 negative impacts on revenue. There are some positive impacts of revenue. So what will be the ultimate impact of revenue? That depends on the next is your consumption basket. That means how much you consume different goods and services on. And please remember, your consumption pattern, the Kerala people consumption pattern is completely different from the people from Uttar Pradesh or Bihar or West Bengal or Odisha. How much you consume and what is your consumption pattern, depending on that your revenue will be impacted. So there are 2 issues in economics. This is called the marginal propensity to consume. Suppose 100 rupees of income that is coming to you, how much that money you will be spending on consumption. That is the marginal propensity to consume. The second thing is that your consumption basket. Can you do one exercise in your, I am requesting in some of you, make 2-3 groups or 5 groups in your class and make items that every month you consume in your house. That what are the items, and share with your other groups and see there will be lots of differences among your class also. The people consuming, the rich people in your class mostly consuming services, and the poor people mostly consuming the foods, mainly the food items. Okay, so there will be lots of varieties of that. So what I have, can you just click this link? This link. Yeah. Click that. It's not working? Okay, okay. So let me explain that there are 390 items. Okay, no problem, no problem, no problem. So, there are 390 items. Let me go back. I'm going. There are 390 items in our consumption basket, in consumption expenditure survey. 390 items are there. Okay. So, if I classify these 390 items into different tax rates and also old GST rates and the new GST rates, if you see that how consumption basket looks like, please remember a large number of items are exempted items. But the sum of time you can't give whether these items are totally exempted or under 5%. Take example of rice. Rice, what you purchase in the loose rice is exempted. But if it is a packaged one or the labeled one, then it attacks 5%. Similarly, most of these food grains, if it is a packaged one, attacks 5% tax rate. So you don't know, I don't know in the consumption basket who is consuming what, whether loose rice or the package or label rice. So I have given that it may be exempt or 5%. So these are the 64 items are there. So out of 390 items, 90 items I can easily say these are exempted items. 64 items it could be exempted or 5%. The earlier the tax rate was 5%, 40 items are 5% category. Earlier 5 to 12. Similarly, the some items you can put whether it is under 5% or 12% items. So similarly, 12% rate was there, 12 to 18%, then 5 to 18%, and now new tax rate. There are 83 items which were 5 to 18%. Now there are only 38 items. So if you see the distribution of the 390 items, majority of the items have moved to low rate, 5%. And how many items through 5 to 18% are reduced? 45 items. And increasing the tax rate to exempt category has increased to 3 items. So 390 items, if I distribute these things, majority items have fallen from the high tax rate to lower tax rate category. Okay. So this is the exercise we have done. And we classify the expenditure, monthly per capita consumption expenditure. I will explain that. And I hope you are not feeling bored, right? If you feel bored, we can play some music to attract your this thing. Otherwise, I can ask some question or you can ask some question. Okay. So now the thing is that this is the average monthly consumption expenditure, average monthly per capita consumption expenditure. That means in an average person in the rural area, per capita per month, how much they spend for consumption? 3,400 rupees. But please remember, this doesn't include your consumption of suppose you are purchasing a two-wheeler or you are purchasing a motor vehicles, those capital goods are not there. Okay. And also this doesn't have some other items also, consumption of other items also. And for a regular person in urban areas, his consumption is 5,757. So earlier 65% items were either exempted or attracting maximum tax rate of 5% before GST rate restructuring. But after GST rate restructuring, 75% of the consumption basket, that means average monthly per capita consumption expenditure, 75% of that is now exempted or attracting maximum tax rate of 5%. That means that 25% of your consumption is only attracting tax rate above 5% tax rate. Okay. So there are lots of incentives government has given. But please remember that this is the static exercise, is not dynamic. I am assuming that as this tax rates are reduced, prices are also reduced. No, that is not automatic. There is a intermediaries, they are the taxpayers or the manufacturers and traders, they have to pass on this benefit to the consumers. I will explain that what they have done. So that is the one thing I want to explain on this slide, and hope that you got the understanding that what has happened. Now majority of this tax rate, when that is reduced, if you see that tax bracket has moved to exempted category and this low 5%. So all the other tax categories both in rural and urban areas has declined. So what will be the impact of this GST consumption expenditure and this rate restructuring? There will be output tax liability will fall, and it may increase the eligible ITC available, and that will take away your net revenue collection. Remove the loss could be counterbalanced if price income elasticities of the demand play positive role. This fall in the revenue of that thing could be counterbalanced if this two effect works. But please remember that this is a static and assumption that our petrol and diesel consumption prices will remain same. But what has happened after this September 2025? The Russia and Ukraine war, then we have Middle East trouble, and the prices of petrol and diesel has gone up. So what the benefit of this reduction of the tax rate has given, actually eaten away by increasing the prices of petrol and diesel. When the price of petrol and diesel is increasing, that has an impact on inflation across all goods and services, right? So that the benefit that we are thinking that what we have, the benefit of reduction of tax rate didn't translate into higher demand for goods and services. That's the second point that I want to mention to you. Now the third point is that what will be the tax impact? That Kerala has come out that 12,000 crore will be the annual tax loss due to GST rate restructuring. Plus, there is all the states, mostly the central government says that around 46,000 crore will be the revenue impact of GST rate restructuring. But there is no serious study. There is no serious study that how they have come out with this 12,000 crore or 40,000 crore impact. So what I found, I have made an estimate. I am explaining this. There are two scenarios I have created. The first scenario is that I am assuming all the bracketed tax rate, like the exempt to 5%, I am assuming these categories are good, all are, the first scenario are exempted, and the second scenario I am assuming they are attracting high tax rate, 5%. Similarly, 5 to 12% I am assuming the lower tax rate, 5%, and the second scenario I am attracting all items are attracting 12% tax. Similarly, I have done for rural and urban areas in the new tax rate and tax rate. So my understanding is that there will be revenue impact 11 to 16%. There will be revenue impact of 11 to 16%. This is the all India figure. State to state this assessment will vary, but there is an revenue impact of this revenue rate GST rate restructuring. For the urban areas, this revenue impact will be 12 to 16%. So if you are interested to see the methodology and another thing, there is a working paper in our website, NIPP website, you can have a look at that. So now this revenue impact will impact different state differently. Take example of Kerala. Kerala's dependence on GST in own tax revenue is around 41%. That means the own tax revenue 41% is coming from GST. So Kerala is moderate impact they can feel, but the state like Assam and Bihar, there is a high dependence on GST revenue, because 57% in Bihar and 52% in Assam kind of thing. So there will be much better impact of GST rate. Any volatility on the GST revenue have a larger impact on these states like the Assam, Bihar, and also state like say Haryana, Goa, and also the West Bengal and that thing. And also Maharashtra, around 47% is dependent on the GST revenue. So now the thing is that how the states will be impacted by this GST rate restructuring, and revenue impact also dependent on their consumption basket, and also priced income elasticity, then the GST compliance, and also depending on tax administration efficiency and all kind of factor. Because tax collection is not only depending on the tax base, tax rate, tax compliance, but also on tax efficiency, tax administration. So apart from tax base, tax rate, tax compliance, if efficiency is good, if the tax administration is good, then revenue mobilization will be very high. This can be moderated by, and that's why my friends always face the tax target. Tax target are set by the budget department or the Ministry of Finance or the finance department every year. At least it will be around 10 to 12% higher than what was your tax collection last year. Because keeping in mind your tax buoyancy, the GSDP growth rate, and also there is an aspiration of the finance department that tax buoyancy will improve over the years and that thing. So that is the one point I want to address. And the second point, and I hope that all of you are with me, so if you have any question, please I can address that. Any question you have? Then yes, please. You can come here, then I can give it. All right, it is okay.
Sir, you mentioned about the volatility in GST revenue because of the blockade in Hormuz Strait and the cascading effect of that, how it is going to be reflected in the Indian GDP. What is your take on it? Because
I think this war between the Iran and the US and that you are talking about.
yes, yeah, I am talking about the Hormuz Strait, broken supply chains, even chips. There is a sort of chipflation because a dearth of chips, semiconductor. So there is a semiconductor inflation. And how it is going to be reflected in the national GDP because of the cascading effect of Hormuz. That is my question.
So I will address your question at the last of this my presentation, because this is not directly linked to my present talk. So now I move to second thought of that thing. The do lower tax rate translate into lower consumer prices. So what I found is that mainly the FMCG goods, the benefits of tax reduction didn't converted to lower prices. It is mainly converted to lower prices on durable goods like passenger cars, then refrigerators, sewing machines, and other things. That means that where we were assuming, please remember, first assumption was entered this tax rate deduction was that why we reduce the tax rate, that we thought that it will boost the consumption-led growth model because export market is not doing well because of Trump tariff, and also the fallen demand from European market and that kind of thing. So what happened then? We thought that if we reduce the tax rate, it will be translating into higher growth of the economy, and that thing we have. But the first assumption fails, that it doesn't translate into lower prices, and lower prices is happening only in passenger cars, refrigerators and other things. But mostly the relatively higher degree of price transmission for consumer durables such as automobiles, air conditioner, footwear, medical equipment and sewing machine. The essential commodity groups and the fast moving FMCG goods show incomplete pass-through. Factors that may have offset the potential downward impact of GST changes could be input cost pressure. And there comes the role of that thing. During that time, Russia-Ukraine war was there, and also over the years, what happened, that the cost push inflation due to the prices of energy, mainly petrol, diesel, that has an impact on the this thing. And in the competitive market, what I found that I may not pass on this benefit to the consumers, because the thing is that in a monopoly market and oligopoly market, I can always retain this profit. This is called another subject in taxation is called the impact shifting and incidence. Impact shifting and incidence of taxation is very important. And so this is the thing is happening. And the second thing that I want to, third thing that I want to address is that what is the compliance cost? So compliance cost of unincorporated enterprises. What is unincorporated enterprises? Unincorporated enterprises are those which are not registered under Companies Act. All of you know Companies Act because you are accountancy, you know accountancy in that. So any companies, any entities, business entities is registered under Companies Act are called companies, and they have to file the income tax, mainly corporate income tax, right? Those entities which are not registered at the Companies Act are called the unincorporated enterprises. These unincorporated enterprises are different types, like the suppose partnership firms, then the proprietary enterprises. Like you have a business, you only do the or your family members are that. That is the own accounted enterprises, non-directory enterprises, directory enterprises. There are several forms. There are the basically also you can the trust. There are social trust. Then the social groups, basically society registration. There are different ways you can organize your business. Companies is one thing. You can register under registration authority under partnership firms. By deeds, you can register a deeds and you can become a partnership firms. For the directory enterprise and non-directory enterprises, you have to be registered with the trade, local municipalities, and get the trade license kind of thing. So now the question comes that these small business people, how much tax, how much compliance cost they bear? So my estimate says that, please remember, they constitute the 91% of GST registration. So GST registration registered entities are 1.5 crore. 1.5 crore taxpayers are there in GST registered. Out of that, 91% are these small. Okay, and please remember the 85% of the taxpayers registered on the tax rate are under below 40 lakh turnover. Only 15% are above the taxpayers. I don't know about Kerala because this data is not available for state-wise, but overall, India, 85% of registered entities in GST are under 40 lakh of turnover, kind of thing. So I'm talking, and they pay around 21% of GST, these entities. So what is their basically the compliance cost? Their pay around 3.28 to 14% of their annual turnover as a compliance cost, and their 5 to 20% of their average annual operating expenses are their compliance cost. Please remember that in GST, compliance burden has increased. Now you have to file 2 mandatory monthly returns if they are not under composition scheme. And please remember that most of these taxpayers are, the small taxpayers are not opting for composition taxpayers. They are opting for the regular taxpayer. In composition taxpayer, they have to file quarterly return, monthly payments, but GSTR 4 they have to file in quarterly. But these people, they have to file GSTR 1 and 3B monthly, then another return, annual return, and also they have to file the UA bill, and if their turnover is higher than 5 crore or like that, then they have to file the e-invoicing also, kind of thing. Please remember, in earlier VAT regime, they were paying this tax. Mostly your tax threshold was around 10 lakh in state VAT. In Kerala, it was around 10 lakh rupees. And they were mainly paying annual return, or maybe the quarterly or half yearly return, these small taxpayers. Now they have to pay monthly returns, 2 tax returns and annual returns and that thing. And there are lots of other tax compliance burden on these small entities have gone up. So this is the third point of my talk. Now the distribution of the tax burden, how the tax burden is distributed across the fractile classes. The fractile classes, that if we distribute the consumers across ascending order of their monthly per capita consumption expenditure, then first 5% of the people, the consumers, then 5 to 10%, 10 to 20% are like that. So if you see that it is increasing, this tax burden is increasing with the higher consumption expenditure. That means our GST tax system is progressive. Progressive means that tax burden increases with the higher expenditure. That is one thing. Second thing is that 50% of the taxpayer, the 50% up to this level in rural areas, and also the next 30% of the consumers bear 31% of the tax burden, and the rest 30% bear the rest 20% bear the 37% of the tax burden. For the urban areas, 50% of the consumer bear 29% of the tax burden, the next 30% bears the 30%, and the top 20% bear the 41%. So that means that a large part of the tax burden are borne by those who are consuming more, not by those who are consuming in the lower strata. And also I have mentioned that if you remember that 75% of our consumption basket are exempted. I have already mentioned in that earlier that how I explained that 75% of, so ultimately how much the tax they pay, how much is your effective tax rate? It is 4.9, around 5 to 5.5%. That is the case of GST I am talking about. 5 to 5%, and this is one scenario. And another scenario, I find that around 7% of your tax is, so it is around 5 to 7% is your consumption expenditure you are paying as a GST. Even if you see that most of the states, the tax collection, GST collection as percentage of GSDP is how much? Is around 5 to 6% only. Okay, I will also explain that in little bit how much is that overall all India level tax burden on that thing. So please remember, apart from this tax, you are also paying other taxes. GST is not the only taxes. Please remember that major tax you are paying every day, petrol, diesel, that is not covered under GST. You are paying the state VAT. Okay. Apart from that, when you purchasing the car, you have to register the car or vehicles. The motor vehicles tax, the vehicle tax you are paying. Stamp duty registration fee. When you are purchasing a land or purchasing a property, you have stamp duty registration fee. You have local government, you are paying property taxes. And apart from that, you have a profession tax in Kerala. You are paying the profession tax. You have electricity duty. 5% or 10% maybe electricity duty is there also. So it is not only that 18% of your GDP that I am saying that thing is coming from, how much is coming from what. So this is the distribution of your tax burden. Now alcohol I am not talking, because you all are students. Tobacco you don't consume. If you are consuming tobacco and alcohol, you are paying, and your tax rate in alcohol is here around 98 to 100% in Kerala. And this number only I can tell. Nobody can tell this number, because I have studied Kerala tax rate on alcohol is the highest in India. Tobacco you are paying around highest tax rate. All over India it is the same tax rate in tobacco. In tobacco consumption is banned in here in the Tamil Nadu, Kerala, but also very high tax. So the four commodities that is government is earning the majority of the tax, that is the tobacco, alcohol, petrol and diesel. And rest are the items, there is hardly any tax collection, that thing. So now assessment of revenue performance of GST, I have lots of time, right? How much time I have? 1 o'clock, yeah. Okay. So I will explain some of this. Please remember that thing, except Maharashtra and some states in some years, none of the states could manage to get the tax revenue, GST revenue, at par with the revenue that is subsumed into GST in 2015-16. 2015-16 was the revenue as subsumed into GST. It is called the revenue under protection. If we take that as a percentage of GSDP, and if we compare the latest, basically the 2024-25 audited statement of accounts of state GST collection, none of the states except Maharashtra, Haryana and West Bengal, all the states, the tax GDP ratio, the GST GSDP ratio is lower than what was there in 2015-16. And mostly except Maharashtra, none of the states could manage to get the tax collection equivalent to 2015-16. The reason is that the states' tax rates are reduced several times. There is a substantial tax rate reduction in 2019-20. 2021 you had a COVID problem. Even 21-22 got good economic growth. But 22-23 was not a good year. Even 23-24 growth rate is not good. Even the Kerala 24-25 economic growth is not good. The major impact was in the COVID. Then you have flood, Kerala devastating flood, Wayanad problem, then also your consumption growth is not doing well because of basically in the Gulf areas, the people staying there from Kerala, and all the repatriation of the money that is coming to Kerala for consumption and other purposes not coming properly. Then US, you have a migration problem. So there's a issue, because as a student of commerce and international business, you should have a larger picture. What is happening to my surrounding, my economy, my Kerala and my state and other things. And these are the issues. So lots of people, you have friends and relatives are staying abroad, right? Every house here, I know, some relatives and somebody is staying abroad, in Middle East, US, UK, and also Australia, New Zealand and that thing. So there's lots of income that is repatriation, and the money is coming from abroad to your state. But it's not coming what used to come earlier. That is as an impact. So economic growth is not doing well, Kerala and other states. Then there is a problem of export market is not doing well because of ban, and also due to there are lots of regulatory restriction, tariff and non-tariff barriers are there. So please remember that thing. What is the impact of the economic growth on GST collection? Let me explain that. Overall economy, this is the central GST collection. This is the gross collection. This is the gross collection of CGST and annual growth rate of CGST. So if you see from 2021, the growth rate was around 30%, because the COVID-19 and the base correction, that thing. After that, it has gone down. So the first, I am not comparing 2018-19 to 2017-18, because that is only 3 quarters. So growth rate is fallen to 6.6%. The CGST growth. What will be the impact of CGST growth is lower, than what will be the impact on the state finances? You will get less money, because 41% of that money is coming to the state, all the state. So when the CGST growth rate is low, the state governments will get lower share in the central taxes. Similarly, the state GST collection has fallen to 10.1%. And please remember that thing, this exclude the Delhi, Jammu Kashmir and Puducherry, and this is combined from the finance account. So the reason of fall in the growth rate in 24-25 is not due to reduction of the tax rate, because in 25-26, I will explain that. 25-26, what happened? This the tax GDP ratio, in CGST collection falls to 2.73. So CGST collection was 2.77 in the central GST collection GDP ratio, and as I mentioned, that is around 5 to 6%. This is the composition of state GST and central GST collection. So from 2.77 it has gone to 2.73. There are 4 basis point reduction in tax collection in 25-26. Similarly, for the state government, the numbers are not available for 25-26. But my understanding is that there will be substantial revenue impact in 25-26. Your collection in Kerala in 25-26 absolutely lower than 24-25. So growth rate will be around, how much growth rate you got in 25-26? 5%. So your state is growing around 10%, nominal growth rate more than 10%, and you are going 5%. That means your tax buoyancy is 0.5. That historically that is the lowest tax buoyancy. And that reason is the lowering of the tax rate and that thing. And of course the international scenarios, and that is happening, that thing. So I am closing with that. Thank you very much for your presence. But please, if you have any question, I'll be very happy to take that. This is the gist of the revenue impact of revenue performance still last 9 years. Okay, now I have already a standing question. So there will be no cascading impact. Cascading impact always we say in the context of GST or taxation when there is a tax on tax. But your question of cascading is important for me because you are saying this Hormuz and this impact. There is a huge impact on petroleum prices, and of course there will be a cascading impact on the prices of goods and services. Mainly when the petrol and diesel prices increases, there is nothing in this room which is not taking the use of petrol and diesel. Suppose these tables, chairs, furnitures are constructed, mainly manufactured in Trivandrum or somewhere else or some other state. They are brought here in this room. There is the input of diesel in going there. Electricity is also, if it is generator set is running in your campus, diesel is used there. These marbles, tiles are Kajaria or something. Their plant is not in Kerala. Some other state that is. Cement, bricks, all these things, this music, this Hitachi, Lloyd, all these things are not manufactured in your campus. It is to be taken from somewhere else and fitted here. So everything, you are coming by bike or bus or taxi or that thing, petrol and diesel coming into the picture. I came from Delhi, so aviation turbine fuel I have spent to come here. From Mangalore, the petrol and coal. So the thing is that this, when the prices are going up, it has a substantial impact on your well-being. Suppose you are spending some money earlier on education, private tuition of your daughter, son, or you have to give money to ailing relatives and that. But your consumption expenditure has gone up. So some consumption you can cut. You can have the fees. Earlier you used to have fees 3 days in a week. Now you can have only 1 day. But some expenditure you can cut, right? Medicine expenditure or the health expenditure of your ailing relatives or education of your children like that. So I am saying that this has a huge impact, and this fall in the cut in tax rate and see that translate into the impact on economic growth will be somehow dampened. It may not have a full impact due to petroleum prices increase. And the second thing has happened is that our corporate entities, our manufacturers, distributors are very not responsible kind of thing. They didn't pass on this benefit to the consumers. And government is basically there is no mechanism for the government. And I also don't agree that government should intervene to make them to pass on these benefits. But over the years, government has made every market, monopoly market. Be it the cement industry, be in the telecom industry, be in the aviation industry, be any industry, it is a kind of, you can see only the monopolies are running that. So unless you have a perfectly competitive market structure, this price pass through may not be deflected. in every month. Thank you.
Thank you very much, sir, for that wonderful session. The floor is now open for questions. If you have any questions, feel free to ask, sir.
Any questions?
No, I will request all the students present here, slowly you learn how to ask the question, because you will get the confidence. Because this confidence and that thing, this is the way of also training you. Train you. Okay? Suppose you are going for interview or there's a group discussion or something, you may not participate in the group discussion. Because now the thing is that the group discussion is must, how you involve yourself in any event, anything. So when you ask the question, it doesn't matter what the question is, but you get the confidence that you say, yes, I can speak in publicly, I can interact with the resource person and that thing. So this is a part of your training. All you are organizing this conference, that thing is part of training. When you go to your job, there will be conference you have to organize. I organize conference and that thing. Because I have learned on my students' life, and when you interacting with the faculties or resource person and that thing, you get some kind of confidence. People will know you. Who are you? And question that thing. It may not, that question may not be relevant. What does it matter?
Students, if you have any question, you can raise that. If not, sir, from my side, while they are coming up with their own queries, from my side, I was informally talking to you also as the finance officer of a central institution. Like we are currently facing what you were talking about, complaints burden is actually very much evident, because when we are approaching our vendors, the moment they generate invoices, we are expected to pay tax. So vendor is telling us that okay, we already paid tax on your order, but what if we wanted to exit from that thing? So to whom we actually raise the issue? So that is basically a problem I think most of the central institutions are facing, not only us. Private institutions may be able to escape from that because they have other funds to channelize, but central institutions, what do you think, sir?
Yeah, that's a very nice question and very thing. Mainly that what I feel there are two parts of that thing. When you are taking something, because you are in the contract of purchasing something from some vendors, and they have already raised the invoice, because you have to produce the invoice to the government to get the fund released. But if the fund is not released on time, they have already upfront, they have given the money tax thing. And you can also claim that money in input tax credit. But the thing is that there is no transaction. But there is a limit of 160 days. If you are not paying them in 160 days, then they are upfront, they are incurring the cost. You are getting that input tax credit, but ultimately the vendor is losing. This is also true for your case also. Suppose you get a consultancy or some kind of thing. Suppose you are conducting this training program, and when you are raising the bill to the ICSSR, you will be paying the 18% GST on that. But if ICSSR is not releasing the money within 160 days and that thing, then it will be a cost for you. But ICSSR will claim the input tax credit. Though this 160 days is given, I think that is not enough. And this is specifically for the government institute. Sometimes we get the project, we pay the upfront the input tax, basically the tax liability, don't collect but pay the government. But sometimes that money doesn't come to us. So I think there's a need to have a changing the rules, mainly for the government institutes and that thing. And if you say that why we should differentiate between government and private institute and that thing, yes, that's true, because we should not. And this 160 days should be at least can be extended to some 1 year. Even within 1 year the money is not there, then it will be reversed. Basically, the entire tax collection, that thing should be reversed to the tax collector and that thing.
Thank you, sir, for that clarification given. I hope students, do you have any questions? Yes.
Mic. Can you come here and take the mic? Is there? Is going. Mic is going to.
So given that Kerala has a relatively small manufacturing base, how can it overcome GST revenue shortfalls? Because if, as you said, Kerala is still facing the manufacturing issues, no factories, no large plants like that, because its geography is like that, because there are 44 rivers, and in Malayalam we can say Malanadu, that means the hill stations are there. When we come to the west side, there is Arabian Sea, and only a small portion in the middle part of the state. So when we say in the reality, how we can overcome such revenue shortfalls?
The reason is that mainly in a GST is a destination-based tax system, and is a consumption-based tax. That means where the consumption is happening, there the tax will go. It doesn't mean that if you don't have the manufacturing, all the consumption items are coming from other states. Earlier they used to collect the CST, the central sales tax, 2%. You are paying, you used to pay that state, origin state. Suppose Tamil Nadu, some goods are coming from Tamil Nadu to Kerala. Tamil Nadu government was collecting 2% CST. And you are collecting the sales tax or VAT or whatever. The reason is that I am saying that in the GST regime, you are better off because all the taxes are now destination based. Like all the taxes are consumers, whatever the tax they are paying to the state government, your state government. But the problem is that earlier there was a no tax of central excise duty up to 1.5 crore of turnover. But now the central CGST, earlier there was no CGST up to 1.5 crore like central tax. But now the CGST and GST threshold is 40 lakh. So a large part of tax collected in the Kerala is also taken away by the central government. That's one thing. The second thing is that earlier the tax collected to other states are not coming to you. But now all the IGST settlement is happening to the state, because the input taxes, when the goods are moving from other state to your state, they will be paying at the origin state the IGST. When the goods are coming to your state, this IGST will be settled with their SGST and CGST liability. This settlement, and in Kerala is the net settling is happening in Kerala in terms of IGST settlement, because you are getting more money through IGST settlement also. Now manufacturing base is not there, it will hamper your per capita income. And that's true that why Maharashtra is doing well, because wherever the manufacturing is there, their per capita income is very high. But you have lots of tourism. You have lots of tourism industry, hospitality industry, hospital, health industry and that thing. Now the government has to think of generating lots of revenue, mainly lots of opportunities for tourism. Tourism is not in nascent stage in your Kerala. People are coming only a few places, not all over Kerala. And you don't have that kind of facility all over Kerala. And Kerala is not marketing well. And because the thing is that one way is very costly to come to Kerala. Right? If they come to Kerala, it will be much easier for people to go to Thailand or Bali or like that thing. It's much cheaper to go to Singapore and Bali and Thailand like that coming to Kerala. Because the thing is that you need to have low cost kind of, low accommodation cost, low cost of transport and low cost of that thing to attract the Indian tourism to Kerala. There are lots of good places, people can go, enjoy, stay here and that thing. But they can access those places at an affordable price. And there are lots of students here, they can do small, and homestay is not very familiar in your state. But homestay is very familiar in Uttarakhand, Himachal Pradesh and that thing. So homestay kind of thing also you can think of. So tourism one industry, food processing could be another industry. I was talking to someone, you have some pineapple production and very high pineapple varieties you have. But you can have a pineapple based wine industry, or breweries, basically distillery, that thing. But sometimes this political decision also be taken, because it's a political, because if you give the distillery license, it's a politically it will be difficult for them. But also you have to think of that how people will be benefited from this kind of thing, because farmers will benefit. Then it is not that all the people will consuming, if they don't consuming the pineapple based thing, they will consume the toddy, right? That is happening in so you have to think of alternative employment generation. So people will go to the market with lots of money and purchase, and then the revenue will come. Thank you. Liquor consumption? No, actually the thing is that the consumption of smoking and tobacco is declining all over India. Mainly if you see that the consumption mostly happening in the rural areas, and people with low income, low education and that thing, they are now shifting to basically this cigarette and chewing tobacco. The major increase is happening in cigarette and chewing tobacco, and it is happening, but chewing tobacco is banned in your state. In Kerala, chewing tobacco is banned, and smoking is publicly banned in your state. So consumption in Kerala, smoking is much lower than other state, and alcohol consumption is also moderate in Kerala. It's good that alcohol consumption is lower in Kerala. Mainly the consumption of locally brewed toddy is high. Mainly and consumption of the thing is that another thing is that access to alcohol is very low in Kerala. You have many small number of shops, and another thing, high tax rate, and also people are mainly different communities that don't consume the alcohol. You have some religious community, around their share is 30% of the population, so they don't consume alcohol and that thing. And also the reason is that alcohol consumption among the young generation may be high, but among the people of thing, I don't think is very high as compared to states like other states like Punjab, Uttarakhand, Himachal Pradesh, or Haryana, or some other state. Okay, I can hear you.
What is the reason for the FDI is not
Why? It is FDI is declining. FDI is declining all over the Asia, mainly due to two reasons. The one reason is the Cantidix assessment. Cantidix has gone up after the global financial crisis in 2008-9. So always we are in a conflict. So India-Pakistan conflict is there, then there is a conflict between the Russia-Ukraine, then we have Middle East conflict, then we have even Bangladesh, what has happened, Nepal, what has happened. Then another impact is basically that we don't have much kind of good investable projects also. And the lots of conflict within the countries in the Asia, like India, China, or India, China, Taiwan, and also our Asia Pacific region, there are lots of conflicts. So when the country risks assessment, there is a political risks, there is a climate change related impacts, then also the global kind of conflicts related problem, then internal problems kind of thing, like within country conflicts and risks. There are lots of things they are taken into consideration before FDI investment and that thing.
So thank you, sir, for that very well articulated clarification for the queries raised. Good afternoon, everyone. As we conclude the first technical session of the 3-day National Conference on GST, I would like to appreciate our resource person, Professor Mukherjee, for that insightful and thought-provoking session. The entire session was basically covering various aspects of GST, like revenue implications of GST, whether the lower tax rate is percolated to the consumers in the form of lower price, and what are the complaints cost involved in it, distributional aspects, all those kind of things. In fact, sir was explaining us like though the regulations of GST aim to reduce the tax rate and through that reduce the burden of the consumers in terms of lowering the price, sir was explaining us why it is not happening. If it wants to happen, the intermediaries who actually want to pass on those benefits to the consumers. Sir was also telling us about the revenue impact, though governments were coming out with very attractive figures like, okay, this much is the revenue generated from GST and all. In fact, sir was telling us there are serious studies yet to be conducted in the particular field to confirm all those kind of things. So, in fact, sir was giving us a research gap in the field. So, for all the research scholars and students who are interested in doing some research, you can focus on these kind of issues which are discussed in these deliberations. I think this was a very fruitful kind of interaction, and I thank all the participants for actively interacting with sir. And I thank Professor Mukherjee for his very enriching kind of session. Thank you. Thank you very much.